We have seen the naira trading very close to that level that the central bank has said it's comfortable with, but it's still certainly above that 155, the top band that they have set. Is there any respite here for the naira as we head towards the end of the year into 2012?
Yes, we believe so. Considering the fact that if you look at the CBN window, which is WDAS, the level they have right now, which is 156.70, is still within the plus 3% band that actually set at the last meeting of the MPC. But if you look at the interbank market, that's where actually we have the pressure on the currency. We've seen that traded as high as 162 yesterday, before we saw some respite as CBN sold off some currency in the secondary market. I think the pressure is still there because of the amounts that they will be putting on offer in their official windows.
Right.
For some time now, we've been seeing them offer within the 200 million range, and as long as this pressure continues, because we've seen demand ranging between 250 to 300 in the official windows.
Right.
But they've kept to the 200 million supply they've been doing for the past few weeks. I think if they could put up the amount on offer to some extent, and I'm sure with oil inflow coming through from some of the oil companies, I'm sure this actually could be tamed.
Yeah. So on that interbank market, what sort of range then can we expect for the coming week to the end of the year?
We're looking at most banks or most companies actually be running off the activities before the end of the year.
Right.
We're close to the mid-month of the year now, and going forward, we don't expect to see much actually demand coming through that angle. But that being said, with the supply on the official window still coming within this range of 200 million, and the pressure within 250 million to 300 million, I think there's still possibility for the interbank to suffer a bit. But we see range between 162 and 163.
Yeah.
And once you get to that level, there's possibility that CBN will intervene again.
Yeah. But for how long as well do you think then that the CBN will tolerate this ever-increasing weakening in the naira? As we were saying, I saw a few minutes ago, we're looking at the naira 162 against the dollar. That's way, well, maybe not way, but it's significantly above their target band from that 155 plus 3%.
Well, like I said, the secondary market is actually different from the official windows.
Yeah, no,
the
agreed.
official window is still within their bands, but the secondary market is where they need to put their eyes on. And don't forget that a lot of dividend remittances or whatever actually being moved to interbank. So I think the pressure you're seeing on the dollar right now is actually because a lot of those demand coming through from all those corporate and official windows that are actually not been fulfilled from the CBN auctions.
Yeah, that's my point, because the point I'm making is that for how long then can the CBN tolerate that ever-weakening bias on the interbank market?
Well, I think as
or
long
do
as
they have to do anything, do you think?
What they need to do is what they've been doing, but maybe the modality is what they need to check.
Right.
Towards the end of trading the secondary market, they've been coming in to offer some dollars to banks to sell one-off. If they keep on pressure by selling some of those dollars in the secondary market, actually may tame the currency from actually soaring up in the secondary market. But the problem is that I think there's something that we are not actually very clear of. Are they ready to actually deplete the reserves to be able to save the currency?
Yeah.
That is a question that is in the minds of everybody.
Absolutely. Let's move on to the fixed income market and talk about some bond action that we're expecting for next week. 60 billion naira, the central bank is scheduled to sell next week. What sort of trading ranges can we expect? We saw earlier in the week Merrill Lynch Wealth Management deciding that they don't want to be part of the Nigerian market. Do you see any potential risk coming into this and perhaps seeing pressure on yields going forward?
For now, I don't think so. Don't forget that this is going to be the last auction for the year, and from the amount they put an offer, they put about 34.1 billion on the 2018 maturity, which is a 7-year bond, and the 30 billion on the 2019 maturity, which is about 8-year bond. And those bonds in the market has actually been shift from the short end to those particular end of the curve from mostly fund managers and PFAs and few banks who have shown interest along that part of the curve. And looking at the amount on offer at the next auction, I think the market has the appetite and to be able to take up this demand from the market. I don't think the yield is going to be a major concern here.
What are you expecting in terms of those yields?
The last one printed 16.5, both maturities. I think this time around we'll be seeing pressure on that part of the curve, and I think it's going to be within the range of 15.5 and 15.65.
For next year then, what can we expect? What's the outlook for the Nigerian bond market?
For Nigerian bond market, a lot of things are going to depend on the inflation outlook for next year. A lot of things are going to depend on whether the oil subsidy is going to be removed or not. And that will portend whether the interest rate is going to go higher than the present level that we have right now or lower. But from what we've seen from the feelers we're getting from the government, it looks like the borrowing for next year is going to be reduced. And if that happens, then actually could see more interest coming through because there still will be interest coming from PFAs and even few banks to invest. Anything from offshore? The offshore guys have been coming in trickles, but there's nothing so significant coming through from them. I think they will be looking at the situation and appraising that time goes on. And we'll see interest, but I'm not too sure if there will still be huge interest coming through at these levels. Yeah, but Steve, with yields around 15 to 16.5%, I mean, you compare that with Kenya, which is sitting around the 18 to 19% range, and sometimes you see 22% on that 91 bill. This is not uncompetitive within the African space, and we have seen foreign interest on the Kenyan market. Yeah, I agree with you, but don't forget that the last MPC that they had in Kenya, they increased their MPR by 150 basis points. That interest rate that you're seeing in the secondary market is actually tailing what's happening in the benchmark rate. So if you look at it in terms of Africa to Africa, probably you will say it's not competitive, but I think with the risk that you're taking in different countries and their currencies actually involved in it, I think there's more stability in our own economy compared to other regions. Particularly, I think, if you consider also the fact that Nigeria's economy has been growing at the rate of 7%. Final question to you, Steve. Let's go back to the Naira. Your trading range for 2012? Trading range for 2012, as long as the band still remains with the 155 reference point, and it's possible for the government to be able to build and grow the reserves, I think we'll still see the currency trading between the 160 levels. Do you expect, though, that the central bank will be able to maintain that 155 band against the pressures that we're seeing for demand for foreign exchange? Well, if you ask me, my personal opinion, based on what we are accruing in that reserve right now, and the fact that we've not been able to save in that area, and that's the only evidence that I see is left for them to be able to defend this currency, I would say no. But well, I think it's left to them to look at all the figures and all the numbers to see whether they'll be able to keep that reference rate of 155.